Hello, it's Robert Miner with Dynamic Traders Group with our DT Daily 3-minute update and trade strategy for our YouTube and Twitter friends. We're going to talk about a specific market, not only a potential immediate trade or something that might develop in the next few days, but a market that might be developing a major trend change that'll last for several months and be very important on how it relates to some of the other markets that are traded in the intermarket analysis. So even if you don't trade the market that we talk about today, you can learn about the analysis and trade strategies and apply it to other markets at any time frames. And of course, if you like what you learned today, check us out at dynamictraders.com. Okay, let's get at it. Today I'm briefly going to talk about the euro and the dollar and identify if they may be at a very significant reversal time and what the trading strategy will be. I'll start with the euro. This is the euro weekly. Key piece of technical information here is the euro weekly made a DT oscillator bull weekly momentum bull reversal this past week. That's significant, not only because it made the bull reversal, putting the dual look back momentums in a bullish position and nowhere near the overbought zone, implying that at least for the immediate term, we ought to be sideways and up for at least another 2 to 3 weeks. And any declines should be corrections. This was also on a bullish divergence of momentum and price, lower low in price, higher low in momentum. That's pretty positive as well. We got a long way to go on the upside to confirm a major low, but at least for the next few weeks, we should be net sideways to up. I've got all these Fed announcements. Of course, we have that coming up on Wednesday in just a couple, 3 days. And usually, now this is weekly data, but usually within a few days of a Fed announcement, the euro makes a reversal lasting several days. Before we continue on and look at some longer term and the dollar, here's the daily data for the euro. Shows a lot of the Fed announcements for this past year. You can see we frequently, within right on the day or within a day of this announcement, we have pretty sharp reaction depending on what the trend was going into the announcement. And sometimes those only lasted 3 or 4 days, but they were pretty significant in price. Again, here's another low. Came up about 4 days, but it came up to a new high. Really fast move. Here we were coming up strongly. We reversed lower for almost 2 weeks. So given that we have another Fed announcement, is that this Wednesday, if the euro continues to advance into next Wednesday, it's more than likely we're going to make a high that'll last at least a few days, have a sharp reaction. Why do we anticipate that? Our DT oscillator momentums, daily momentums, are overbought. They happen to be, this 8 is bullish, but it's right under the overbought zone. So again, the upside should be very limited before we make a daily high. Ideal setup would see us go sideways to up into Wednesday and have at least a few days sharp reaction. More than likely, though, if this is a weekly low, I'm going to show you why I think it's a monthly low. I'm going to go all the way back to the monthly data, and this is Elliott wave. Some Elliott wave counts that we have here. It's a 1 and a 2 and then a 3 and A of 4, and the potential of just this past week or so of completing a wave B low. Really significant, completing it just above the 78.6% retracement. It was the end of wave 5 of C, price target of potentially B. That's really significant because if we completed that low, we should be sideways up for several months and eventually come up to test or exceed the February high. We got to take that a week at a time, month at a time, so to speak. And again, we got a long ways to go on the upside to prove that out. But whenever I think we're at a reversal of a lower time frame, which could also be the higher time frame. I go under the assumption we've probably completed the higher time frame, and I want to position myself as such. So needless to say, right now we want to be looking for long positions in the euro, short positions in the dollar, as long as we haven't taken out the September low so far. If that's taken out, then probably this whole kind of count is incorrect. But for now, boy, I'm just focusing all energies on identifying long trades in the euro, short in the dollar for a potential multi-month uptrend in the euro, downtrend in the dollar. And specifically, in the days ahead, if we do complete a high here next week in the euro, and if we have a sharp decline, the next daily DT oscillator bull reversal, if price is above the September low, boy, that's going to be the setup of the month and maybe of the year for the euro. So we'll keep our subscribers alert to that on a day-by-day basis. But that's what you want to look for, I believe, very significantly in the days ahead. This is the dollar, and this is just the December contract. Again, we've probably completed this wave 5, which should be a wave B of a higher time frame high. We did make the bear reversal, and the dollar daily momentum should be sideways down a couple of days, 2 or 3 days, and but what's going to be significant is in the weeks ahead, because the dollar is just in the opposite position. It's going to be really significant for a lot of other markets if the dollar's made the major high that I believe it has. We'll keep you up to date on that. But kind of take a look at your charts and consider that we've maybe made a multi-month high in the dollar, a multi-month low in the euro. That's it for today. Take care.